How is it that we have top analysts screaming that Tesla is a major buy, but on the other hand, we have Tesla executives that happen to be selling off tens of millions worth of their stock? And adding to that, we now have retail investors and, well, the media stating that the Tesla brand has now become toxic. The question that we're all asking is, should I be buying more of this Tesla stock on this recent dip? Or should I be selling some of it off and take a little bit of margin to play it safe? Look, if you have stock in Tesla, then I'm pretty sure you're going to want to stick around for this because you'll want to see the big picture compared to those fundamentals. But first, let's take a step back. About 2 weeks ago, I was in my office writing up my newsletter, and I was sharing my thoughts about Tesla's upcoming earnings call. Many of you may recall from that newsletter that I pointed out that Tesla was probably going to have declining top-line revenue and margin because they'd already stated that they were dropping prices on many of their models. And it seemed apparent they were having stronger competition in China. And the Cybertruck sales, well, they were crumbling quicker than cookies in the hands of my favorite Sesame Street character. But knowing the Elon Musk model, I also expected that he'd be pumping up robotaxis for future growth. No doubt about it, he is great at marketing his own tech. But I couldn't help but push myself away from my desk and get a little peeved at the fact that Tesla stock was probably about to have a major drop, and I was a day away from going on a winter vacation with my family, where I knew I probably would not have easy access to the internet. So I literally sent out my newsletter and instantly began getting a little bit uneasy. All of my investment knowledge was telling me that Tesla, they were set up for some major hurt. So my dilemma was, do I write it out, knowing that the next 10 days I probably wouldn't have much access to the internet? Or do I look at the facts that are right there in front of me and sell some of my Tesla stock? And that may be the same question you're asking yourself right now with the current dip. Well, as for me, while I was at the airport on our way to vacation, I sold my entire position of Tesla at $395 a share. All of the facts were telling me that a major pullback was about to happen. Here we are 2 weeks later, and sure enough, the stock has mostly been on a steady decline. And now I have to decide at what price I want to get back into Tesla, which is also another question that you may be asking yourself. While I'm filming this, Tesla is at $350 a share, and last week it had dropped down to $335, which was a major test for Tesla because its 100-day moving average is at $335. If it can't have consistent support to maintain this price, then I believe more retail investors will get a little bit scared and create more of a sell-off. As we know, Tesla rallied up to $350 just a few days later, but will it maintain this support with all the negative press? Now let's take a moment and cover the business fundamentals so you can research this a little bit further on your own. For starters, we know that 92% of Tesla revenue comes from its automotive sales and services, and roughly 8% is from energy generation and its storage. And the vehicle sales happen to be flat in 2024. And given the new Model Y showing modest to no growth in China, that may be similar to what we're going to see here in the US when the new Model Y launches in March. Now, even though the energy segment is growing at about 90% year over year, it is such a small percentage of the overall business that it won't be enough to carry the Tesla stock to match our existing stock price. So taking a step back, with vehicles making up the majority of its sales, the bad news is that it's set up to have another flat year in 2025, just as it had been flat for 2024. And we can see that net income took a major drop, and the PE ratios have bumped back up because of the margin decay. In fact, their margins on vehicles have consistently been declining since 2022, and the risk of massive tariffs on imported items, well, it's directly going to impact their domestic pricing. Obviously, higher costs are going to mean higher prices. And we can definitely expect our foreign trading partners to impose tariffs on Tesla products that may be imported to their countries, which would obviously slow down their sales globally. In addition, a big part of Tesla profits are coming from the EV tax credit, which may potentially be reduced or removed this year. I'm not sure that Elon will be able to convince Congress to eliminate all of those government jobs and USAID contracts with our farmers, but then somehow keep the EV credits going. That would be a bit hypocritical and obviously a conflict of interest. Now, I do have to state that I am in no way political. I'm merely observing what is happening and how it may impact my investments. Now that all the doom and gloom is covered, what about the future robotaxis for Tesla that everybody's talking about? If you're not familiar, this is a concept allowing for fully autonomous self-driving taxi service, allowing Tesla owners to add their vehicle to the taxi fleet to earn a little bit of extra money. It's sort of like the Airbnb of taxi service. With this, they expect to start Robotaxi service this summer in Austin, with plans to manufacture the Cybercab in 2026. So what is that worth? Well, according to Kathy, it's an $8 to $10 trillion opportunity. I'm sorry. Is it me, or is she simply the kiss of death for high growth companies? I personally try to stay clear of her predictions, but in this instance, it really worked for the segment. I may not fully agree with her high prediction, but I do agree it's going to be worth $1 trillion or more. Honestly, I truly believe that. But there is no clear sight as to when regulators would allow for fully autonomous vehicles. That and FSD, or full self-driving software, still requires human supervision. And previously, everyone felt Tesla was the only FSD provider in town. But now BID has announced its God's Eye self-driving tech, which comes standard in their cars, versus FSD being an added paid service with Tesla, making the Chinese market a declining venture for Tesla at its current model. And not to mention that there's a lack of infrastructure for chargers to support this level of robotaxi service across all of the states. So I have to wonder, is this 1, 2, or 3 years out from being any form of reality? And clearly, I don't know. But I would love to hear all of your theories about Elon, his connection in the government, and how the biggest part of the Tesla business hinges on reducing government regulation. My intent isn't to scare anyone, but if you take the rule of 40, Tesla doesn't pass because the revenue growth percent plus the profit margin percent, well, it doesn't meet or exceed 40. But that's okay. The growth from FSD, robots, and robotaxis is probably still 2 to 5 years out from seeing any realistic gains. Now, I want to point out that the research that I'm referencing in this video isn't as hard to track down as you may think. I often get questions about the software that I use in researching stocks, and I often use forecaster.biz, which is a sponsor of today's video, and I'll show you why I use them when I look at the seasonality for Tesla. Here we are today in February, and the 3 and 5 year trends is for the stock to dip down until late March. And we can see a consistent spike in July. So when we go down to the monthly averages, we can see that play out. And in July, the stock has been long 100% of the time over the 3 and 5 year mark. So I'm definitely going to be buying back in before then. And when we look at the fundamentals, it shares 3 different valuation pricing models for a fair stock price. And I think it's a little bit high given the current environment. And down below is where we can see the segment breakout where energy generation and storage makes up 7.8% of the revenue. Overall, Tesla has strong potential, and I think we all know that. However, given what we know about Tesla's 2025 sales being flat, margins declining, the EV credits are in question, tariffs will increase costs, and robotaxis are potentially years out from being readily available, let's just say that I'm pretty glad I sold my entire position when I did. My opinion is I think that Tesla is in store for more corrections in its price beyond what we've already seen in the past 2 weeks. But once again, that's just my opinion, so please go out and do your own research before you take any form of action. For this year, 2025, I believe that Peter Lynch's valuation of $280 is much more on point because of the gap between the existing revenue and the future technology from Tesla becoming more mainstream. And another analyst made it quite clear when he planned to get back into Tesla.
But Tesla is a name that I do own. I've owned it for a while. We will be adding when it gets closer to 300 because I think it has the ability to be that robo-taxi, to be that autonomous driver that we all hope for.
Look, the next earnings call is on April 29th for Tesla. And historically, the stock has seen upside after that earnings call. This is when I expect Musk to give out huge news about robotaxis and FSD with very specific dates of its launch in Austin, Texas. However, analysts and insiders have complained that Elon has practically abandoned Tesla for his work at the White House, and the brand is taking a major beating for it. All of this negative sentiment is going to take a toll on the stock, especially when you combine it with the waffling fundamentals on all of their core business. With that said, I am looking to buy back into Tesla at around $320 a share, hopefully within the next 2 months. I think we can all agree the company is a total powerhouse, and I believe it's going to see tremendous growth over the next 5 years, but I don't want to overpay for it. So the big question is, what do you believe is Tesla's fair market price? And when do you think is your next entry point to buy? As always, thanks so much for watching.